the next talk on the digital bank of tomorrow, unleashing growth in APEC with platformication.
Hello, my name is Jean-Paul Mergeai. I'm the president of the international region of TEMENOS. It is a great honor and a great pleasure to be invited to participate in Taipei FinTech. I would like to use the next 20 minutes to deliver some observations about the challenges and the opportunities that are facing the banking industry today. In the wake of the unprecedented, challenging times we've experienced recently and how this period has changed the way we live and work, we've had to make significant changes to the way we deliver services to our banking customers. Number one, what is now driving us is not just the certainty of change, it is the increasing pace of change, which we must now accept as fact. Number two, our customers are in the driving seat of change. They see change as normal, and they want us to meet their very high expectations even faster. But that is a good thing. Change drives progress, and progress drives even more change. It is not as simple as that in reality. We develop complex software for banks. We have had to be loyal partners for those banks, and we help them predict the future. Not an easy task, I can admit. But since almost all banks face the same problem, the pace of innovation has increased at astronomical speed. In a short time, we at TEMENOS have helped banks, our customers, reinvent their very being in a digital world. Well, what is it we do with TEMENOS? TEMENOS specializes in delivering technology solutions to the banking industry. Our goal in life is, simply put, to make banks successful. Our vision is to provide financial institutions of any size, anywhere in the world, the software to thrive in the digital banking age. We do this by building, delivering, and supporting the world's best packaged, continuously upgradable, and independently deployable banking software, which is both cloud native and cloud agnostic. We also do this through design-led thinking and hyper-personalization capabilities. We've been doing this for the last 27 years. We focus on one single industry, the banking industry. And I would like to add that TEMENOS is quite unique as a company because it has the stability and the market capitalization of a blue chip company to support the execution of our medium and long-term strategy and the passion for innovation of a fintech. The ability of TEMENOS to innovate and to allow our customers to produce industry-leading cost-income ratios matters more now than ever before. Even before COVID-19, banks were under multiple structural pressures, which have been intensifying. The banking industry is changing. Even before the pandemic, banks were under multiple pressures, hindered by their legacy systems, high operational costs and risk, reduced time to market, and they provided poor customer experience and analytics. It's been tough for them to undertake the new challenges, such as tough market conditions, new business models, new competitions, new customer expectations, and new technologies. These are the challenges that they're facing every day. Now, what are the current disrupting technologies affecting the future of the banking industry, and how do they impact our clients? Every year, TEMENOS and the Economist Intelligence Unit survey several hundreds of C-level executives from all over the world, and they measure the impact of evolving technologies in the banking industry. Our latest survey and report has just been published, and my presentation today is going to be around some of the findings that we think are quite remarkable. According to 2/3 of the senior bankers that we have surveyed, new technologies will continue to drive global banking in the next 5 years. New technologies above regulation and above changing customer behaviors. This compares to just 43% 2 years ago. Now, 81% of our banker surveys believe that artificial intelligence, as an example, will determine winners from losers. COVID-19, that's a fact, has rapidly changed customer mindsets and circumstances. It has also driven banks to accelerate and scale digital transformation and customer experience across complex products and customer journeys. Many incumbent banks are not equipped for this change because of the limitations of their complex legacy-based IT systems. Although banks had been investing quite heavily in digital and cloud technologies before COVID in the past few years, they've been, for some of them, reluctant to embark on an all-out system modernization. True digital transformation requires banks to progressively replace their core processing systems with cloud-native intelligent banking platform designed for seamless scale and digital activity to facilitate continuous innovation. Without such modern platform, it will simply be no longer possible to compete effectively in the industry. The good news is that such transformations can now be executed efficiently and with acceptable levels of risk with cloud and SaaS banking platforms built on API-first microservices, DevOps principles, offering automated migration and deployment. Almost 9 out of 10 bankers surveyed in our Economics Intelligence Unit 2021 survey believe, as an example, that DevOps methodologies and modern cloud banking will drive core banking transformation over the next 4 to 5 years. It is, frankly, undeniable that COVID-19 has had an accelerating effect on the banking industry's digitalization. Our survey indicates that it has brought it forward by 3 to 4 years. As TEMENOS, we speak to 3,000 clients every day, and we saw that the banks with a high level of digitalization fared much better during the crisis than those without. The increase in the use of mobile banking worldwide during COVID-19 jumped, and further increases will follow. We're absolutely confident and certain about it. The pandemic shock has accelerated changes already underway and sparked new ones. Customers are moving to digital channels faster than they have been in the past. Online banking use has risen by 23%, and mobile banking use is up by 30%. These changes are likely to be permanent, accelerating the migration to digital channels over pre-crisis levels by 3 to 4 years. Meanwhile, there's also a huge decline in the usage of cash since the lockdown and social distancing regulations. While the decline of physical branches has long been predicted and announced, an impressive number of 65% of our respondents in this survey now believe that branch banking, as we used to know it, will become a thing of the past. And in as little as in the next 5 years. So the transformation, branch banking being dead, is really, really imminent. 81% of our respondents believe that cash will represent less than 5% of all retail transactions globally by 2025. Consumers are increasingly switching to online channels for both banking but also insurance. And the frequency of their interactions is expected to rise even further after the pandemic over. As financial services gear up to meet consumers' demand for a seamless omni-channel presence, bridging gaps and limitations is absolutely, the bridging the gap and limitations of their IT systems is absolutely mission critical. Before COVID-19, profitability of banks was already under pressure. Banks navigated a low interest rate environment. Some of them were still recovering from the 2008 financial crisis. Banks do need to increase their return on investment. Banks often face high costs for keeping the lights on due to legacy software. This prevents them from investing on growth and innovation projects that would truly increase their profitability. An average of 76% of banks worldwide earn returns below their cost of equity. Even before the pandemic, according to Gartner surveys published in 2018, 80% of traditional financial services would close, become commoditized, or become irrelevant, i.e. they would continue to formally exist, but would not be able to compete effectively. The banking industry is absolutely changing. Before the pandemic even, banks were under multiple structural pressures, hindered by their legacy systems, high operational costs and risks, reduced time to market, and provided poor customer experience and analytics. It is tough for them to undertake the new challenges, such as tough market conditions, new business models, new competitors, new customer expectations, and new technology. Other really interesting findings of our survey told us that customer experience is now the new battleground in banking. 81% of our respondents believe customer experience rather than product is now the differentiator in banking. It's seen as a top strategic priority for survey respondents globally over the next 4 years. This is a real turnaround in priorities for an industry that has traditionally focused on products. With big tech and FinTech specialists in customer experience increasingly entering the banking market, this is becoming an increasingly pressing issue. Providing an experience that will delight customers requires banks to move to new business models. People now have options that they did not have before, and there are many banking providers out there who can provide new customer experience with good service. Many banks are using platform-based models to provide a better, more innovative customer experience. We're seeing banks partner with banking and non-banking third parties to offer a wide range of products and services through ecosystems. For example, banks like TSB and ING partner with fintechs to help customers manage utility bills and switch energy providers within their online banking dashboard. According to our report, 47% of banking leaders expect their businesses to evolve into the ecosystem model in the next 4 years. The survey also shows that payment disruptors and e-commerce tech giants as the most significant competition, followed by partnerships between banks and fintechs. But banks also know they have a competitive advantage through customer trust, customer data, regulatory compliance, and access to capital. So digital transformation will definitely allow them to exploit these advantages and successfully competes against disruptors. Let's look at how challenger banks are doing, and let's look at them especially in Asia Pacific. Asia Pacific is home to 20% of global digital challenger banks, identified by the end of 2020, with 50 of such digital challengers operating in markets in the region. While the number of digital challenger banks is growing, success as defined by profit generation remains quite limited at the moment. Beyond digital challengers, latest research analysis reveals that just 13 or less than 5% of all digital challenger banks have clearly achieved break-even globally. Out of these 13 players, 10 are based in Asia Pacific. Besides the pandemic, the rise of digital giants is another challenge for the incumbent banking industry. This is the decade of digital banking. Consumers are rethinking how they seek financial advice, build wealth, improve their overall financial fitness. However, the bank's present architectures and infrastructures are often hindering them. In order to keep up with rapidly changing customer needs, banks need to move away from legacy systems toward adopting agile and scalable digital technologies such as cloud platform, artificial intelligence, and machine learning. We also compared banks, giant technology companies that we refer to as big tech, and financial technology companies in the past 10 years, FinTech. Big tech and FinTech, as you can see, have far surpassed the development speed of the banking industry in terms of market capitalization and median ratio. The banking landscape has already been changed, and incumbent banks have faced pressure to continuously upgrade their digital capabilities to cater for evolving customer expectations. Companies with a strong focus on technology have better valuations. Banks should bet on technology to improve their profitability. The reason why in the decade of technology, companies have far surpassed traditional banks in terms of market value and profitability is because new entrants have a completely modern stack of technology, betting on technology with a highly optimized IT landscape. Therefore, they can offer new customer experiences and experience with new business models. Meanwhile, in view of the digital operating model, technology companies have significantly reduced their operating costs, which makes them more competitive in the capital markets. Is the incumbent banking industry defeated? That's a very, very important question. Banks, we believe, still hold both customers' trust and regulatory expertise, which are two phenomenal assets. This highlights the needs for banks to bet on technology to leverage this advantage. As long as they pick their partners well, banks can only benefit from their investments in new technology. In conclusion, we believe the tipping point has been reached. The banking industry is changing so dramatically that it is almost impossible for banks to stay competitive and fulfill customers' needs with their legacy-based IT systems. A modern digital engagement platform without a modern core processing engine will hinder a bank. It will be unable to provide customers with the full front-to-back service that they have come to expect from providers of lifestyle and retail services like Amazon or Uber. Finally, the order of magnitude reduction in operating costs required for banks to compete in today's open banking world means that they will have little choice but to digitally transform and renovate their end-to-end business model to the core. This is what we're calling reinventing the banking experience. Asia Pacific is a very exciting, unique, and culturally diverse region, stretching from the borders of China to the southern tip of Australia and New Zealand. Asia Pacific is a vibrant economy with a strong appetite for disruptive technologies, digital transformation, and instant payments innovation. We serve globally 3,000 financial institutions, and this includes 20 of the top 50 banks in the world that are located in Asia Pacific, and more than a dozen challenger banks. Our strong local network of offices and our local domain experts bring us very, very close to our clients and our prospects. And this has allowed us to understand the vision, the opportunities, the challenges, the requirements of our banking clients, and to deliver innovative technology solutions quickly to help them in their digital transformation. Our purpose as TEMENOS is to make banking better and more human for over 4.3 billion people who call Asia Pacific home, together with our clients and our partners and the whole TEMENOS community. I would like to spend in the last few minutes of this presentation to describe two of our success stories in Asia Pacific, which really demonstrate our commitment: Virgin Money Australia and WeLab. In early 2020, Virgin Money Australia, a division of Bank of Queensland, selected TEMENOS as its digital banking technology partner to propel its growth strategy. VMA selected TEMENOS front to back SaaS offering with TEMENOS Transact, the next generation core banking solution, and TEMENOS Infinity, the leading omni-channel digital banking product covering customer engagement from onboarding to account servicing through long-term retention. Our API-first technology will enable Virgin Money Australia to offer a marketplace of financial services to help their customers improve their financial fitness, as well as bring innovative banking products to market faster, such as savings accounts and loyalty programs. The bank will offer a seamless digital experience to its customers across digital touchpoints for all retail banking products, reducing the client onboarding to just a few minutes. WeLab Bank, Hong Kong's first homegrown virtual bank, uses cloud-native TEMENOS Transact to provide a range of new generation digital services for their customers to enjoy 24/7 from their mobile phone. Designed, built, and launched in less than 10 months, the fully digital bank has seen rapid take-up, with reports of 10,000 accounts opening within the first 10 days of their launch. WeLab Bank is the first multi-cloud digital bank in Hong Kong, operating on multi-clouds at the same time, providing increased operational resilience and disaster recovery capability, which helped WeLab Bank to meet the reliance and resolution planning requirements of the Hong Kong Monetary Authority for all banks. With TEMENOS, WeLab Bank is set to transform banking in Hong Kong. In as fast as 5 minutes, customers can remotely open WeLab bank accounts with $0 monthly fees and start enjoying differentiating, highly personalized services such as time deposits with competitive rates, an interest-bearing deposit account with an instant virtual debit card, and retail payments powered by faster payment system, FPS. Everything can be done on a mobile phone simply and effortlessly. So this concludes my presentation. I would like to thank you for your time I was delighted to participate to FinTech Taipei 2021, together with many other industry leaders and FinTech experts. I'm very much looking forward to meeting you physically in Taiwan as soon as possible after this very, very special period that we've all been experiencing. I wish you a great day and a great end of conference. Thank you very much and see you very soon.